Welcome, everyone, to IGC. Let's talk about it. Today, we have Ben Robinson, who is specializing in M&As within the gambling industry, and he's going to talk us through all the difficulties and the challenges that gambling companies they do face when dealing with mergers and acquisitions. Would you like to tell us a little bit more about what you're doing, your experience within the industry?
Of course, of course. So I am the managing partner of Corfi Capital, which was established in November last year. Prior to that, I ran a company called RB Capital, which operated in the sector for the last 10 years. And so that expertise is coming across from RB Capital, where we transacted more than 20 businesses over that period of time. And we're now embarking on a new chapter, or I am embarking on a new chapter with Corfi, which is effectively trying to meld the years of experience that I've had in M&A in the online gambling sector, and really creating an environment where founders and businesses can be not just transacted and sold, but a level of expertise around how to approach the transaction and how best to prepare your business to get the maximum value from it. So that's Corfi Capital in a nutshell.
That's amazing. I know that you have a very good reputation within the industry, and a lot of people they do talk very highly of you. So I will take this opportunity to ask you, what do you think is the most challenging? I know that it's very important to have someone that is holding your hand during those type of transactions.
Mm.
But what, in your experience, is the most tricky or the most important point to never forget about?
Well, with M&A, it is complex, and there are more than one thing to think about. Uh, there's generally one message that I try to convey to owners who might have seen a valuation, they might have seen a transaction, and think that their business is equivalent or better, and expect that transaction multiple to apply to their business. But each transaction is different, and whilst you can draw similarities that have impacted the valuation on a particular business, it doesn't necessarily apply to all businesses, even though your business might be similar in many ways. So whether you are, in a state where your business is at its peak or it's flying, ultimately you need to understand that the market actually will be the dictator of your valuation, not my analysts' valuation reports, which factor discounted cash flow valuations and other methodologies.
Thank you very much for that. So, in your opinion, what are the major driving forces of M&As?
So we are obviously in a constant state of an evolution, I guess you could call it, in the online gambling sector, and it's typically driven by regulation. And Europe is obviously the more mature regulatory territory, with countries like the UK having been regulated for decades. Whereas moving across to, say, the US, where the PASPA repeal has obviously ensued a wave of states regulating, that will obviously create more demand, and the sentiment shifts away from somewhere like Europe, and it takes the regulatory, or it takes the M&A focus more towards those more exciting states where growth opportunities are on their way. So Brazil is another one. Obviously, the US has been lagging with state openings, well, not going as fast as expected. And Brazil has been the one that I guess has been a major focus, and they're obviously looking to pull the trigger on that regulation January 1st, 25.
So, what are some emerging trends within the gambling industry now that will impact M&As?
So we have regulation, right? Those regulatory waves obviously will stimulate M&A activity in the territories and countries where the regulations are being implemented. But there is a new trend forming where over-regulated states, where regulators might have revisited their initial regulatory measures, and they're now looking to either increase their tax or through protective measures reduce the number of spins per minute that a player can make. These regulatory measures are creating an uncompetitive environment for operators, which creates an opportunity for unregulated, unlicensed, black, whatever you want to call them. But it does create a new cohort of growth companies who are coming in and providing effectively services that the consumers want or were used to. And they are typically in the form of crypto, which tends to subvert the payment mechanisms, which we know to be problematic in a regulated territory. So yeah, there is definitely a wave of crypto businesses, and that is being fueled by, I guess, uncompetitive regulated states and just typically unregulated countries where the regulators are yet to step in.
Can the implementation of regulation impact M&A?
Definitely. There have been several examples that I can think of where regulation has impacted a process midway through. If certain things are put in place that impact the future sustainability of the business, then obviously that will have a negative impact on the price of the business. Conversely, you can have positive news that might positively impact the valuation of that business, but in my experience, it tends to be the other way around, unfortunately. I think when you have uncertainty, that's mostly the environment that makes it difficult to sell a business, because you can't financially plan on uncertainty. So even if the regulatory outcome is not ideal, at least it's clear. And from that point, that clarity can provide an ability to forecast, and that's when you can kind of determine what the valuation of the business is and then proceed with the transaction.
How does the macroeconomy impact M&A?
So usually when we look at the macro, we look at the US, because ultimately that's where the money is. So follow the money. But it's also where other countries look to ensure that their strength of currency matches up to the US. Now, if you look at the US and their Fed fund rates, well, after the pandemic and combating inflation, they needed to raise those rates to put a little bit of cold water on the economy. It was too hot. Inflation was out of control. So they rose interest rates, and that had a fairly negative impact on spending and consumer confidence. So that has a trickle-down effect in our industry. Eventually, consumers are spending more money on their mortgages and still having to deal with inflation, so they have less money to spend on gambling. So the disposable income impacts their ability to give the gambling companies money. And that will have a slowing effect on the online gambling industry. We don't suffer in the same way that other industries do. So retail industries are typically, luxury brands and clothing. These industries have a much higher correlation with the ebbs and flow in interest rates. The gambling industry, being one of a vice like alcohol, tends to have a slightly lesser impact, and that has been felt. There have been certain companies who have laid off certain individuals. Better Collective have had a tough time of late, perhaps not due to consumer confidence, but that's another matter. But ultimately, we do see in an economy where the interest rate hikes impact the wider economy. And that doesn't necessarily impact the smaller companies because they're still making money. It does tend to have an impact on public companies and general sentiment within the investor community. So when the markets are bearish, money is tight, investors are less willing to part with their cash in terms of their risk appetite. That tends to flip when the economy starts to boost. Money supply, liquidity tends to enter the market, and that will eventually find its way into investors' hands, which eventually trickles down into the gambling industry, which stimulates investment, and it also paves the way for transactions, leverage buyouts, and those type of things.
That's very interesting. So, shall we speak about public perception?
Sure. I think the industry has certainly matured over the years that I've been in the industry. I would say number of deals that we're seeing by large VC and private equity companies is evidence that it's becoming a little bit more palatable. I think there's still a large cohort of private equity and venture capital that still won't touch the industry, but there have been new entrants in recent years with the likes of Brune Capital coming in and taking in position with OddsChecker. So I think we will start to see more companies coming into the space who will recognize that the US, for example, not being fully regulated, and a lot of the growth in the US market is still to come. And with sports betting, at least, being a very socially acceptable pastime in the US, it's very much ingrained in their culture. We might see a shift in sentiment which will favor the online gambling industry in the years to come. I think in terms of the wider sentiment, if you look at regionally how gambling is perceived, it tends to depend upon which political party is in power in which particular country. So we see the likes of the Netherlands being very conservative, being very restrictive. Similarly, in countries like Germany, where they feel that they need to overburden regulation, and that's, I guess, going back to the point around over-regulation and what the risks are to those regulators or the government itself. Typically, they're trying to raise tax for their strained economies, and if they start to create an environment which is uncompetitive, then it negates the purpose of their original intention to raise capital and obviously protect consumers. So if we see further restrictions in the Netherlands, for example, we are likely to see an influx of crypto casinos and sports books that subvert that regulatory oversight.
So how do you find the market at the moment?
Buoyant. It's definitely picking up. We're starting to see a lot more interest from not just buyers, but also investors who are looking to deploy capital. They recognize that interest rates are coming down, and they see that strengthening economy. So that they're looking to find places, growth companies to invest in, to position that capital. In the M&A space, we're definitely seeing a healthy buy side interest in mostly trending markets, but I think there are a lot of companies out there in our industry who are quite open-minded, and they look for lots of different opportunities, and they're not necessarily blinkered on the Brazilian opportunity, which is clearly a big opportunity. But when a market just shifts from a more global presence to one that's purely focused on the US, which is what happened 2020, 2021, that creates a vacuum. So there's the whole wide world out there with opportunities, and that's when the smarter companies are then looking at certain opportunities within the, I guess, underappreciated markets. So yeah, we're definitely seeing a great deal of interest from buyers at the moment, and yeah, it's a good time to be selling your business. I think leading into 2025, it should be a good year.
Well, thank you very much, Ben. This has been amazing. You always share so much useful information about these topics, so I'm very grateful. And thank you guys for watching us. And I will see you next time on IGC. Let's talk about it.